Chapter 6, Master Budget and Responsibility Accounting, Part 1. To manage their spending, businesses, like individuals, need budgets. You can think of it like an orchestra that coordinates all the pieces of an organization so everybody's playing to the same song. Budgets help managers and their employees know whether they're on target for growth and spending goals. Top managers must convince their subordinates that the budget is a tool designed to help them set and reach goals. So these are the learning objectives for this chapter. And we're going to start out this first part with just some background information about the master budget and what's good about it, describe the advantages of budgets, and then the big one right here is preparing the operating budget and its supporting schedules. This is where all the work is, and the whole chapter is right there. The rest of it's all soft stuff. And then in the third part of the presentations, we'll do this and talk about some human aspects, some special challenges with multinationals. I spent a lot of time budgeting at work. I like it. It's fun. And you get to use new systems and learn more about the whole organization. So there are a lot of neat things about it. But it's also a lot of work, and what happens is you spend maybe 5 months preparing it, and then the whole thing is done, and then about a month after you get into the budget year, it's thrown out the window. So, there are issues with it, but it gets you started anyway. Now, a budget is a quantitative expression of a proposed plan of action by management for a specified period. So management will have all kinds of other meetings with different people throughout the company about what their strategic plan is. What are their action plans? What do they plan to do next year? And a lot of these meetings take place with marketing and production, with economists to figure out, what's going to happen in the world. And then the budget is that decision. And it's an aid to coordinating what needs to be done to implement the plan. All right, so we prepare the budget just according to, just like the way it rolls out across work. And what it does is it coordinates it. And think of a musician, okay, of a great big masterpiece. It generally includes the plan's both financial and non-financial aspects and serves as a roadmap for the company to follow in the upcoming period. Now, budgets serve many purposes for firms, including those seen here. It communicates directions and goals to different departments so everybody can coordinate the actions they take to pursue to satisfy customers and succeed in the marketplace. All right, like what are we gonna sell, and how much, and to whom, and does the timeline look like? When do I have to have it ready to sell? Lots and lots of coordination involved here. And we judge performance by measuring financial results against planned objectives, activities, and timelines to learn about potential problems. All right, so once we've got a plan, then we take the actual results, compare it against the plan, and see how we're doing. Okay, because the plan really supports some objectives, activities, and timelines. And we also use it to motivate employees to achieve their goals. Now, a company can have a strategy for providing quality products or services at a low price, or a strategy of providing a unique product or service that is priced higher than the products or services of competitors. Now, as managers work to develop successful strategies, they must consider various questions, including the risks and opportunities of alternative strategies, contingency plans if the preferred plan fails, and how the economy, industry, and competitors affect the business, as well as and in addition to the questions shown here. Okay, so what are our objectives? And everybody in the company should know this. How do we create value for our customers while distinguishing ourselves from our competitors? Okay, if you can't do these things, you'll be out of business pretty soon. It's really serious. Are the markets for our products local, regional, or national? What trends affect our markets? Okay, what's happening today? I don't even want to think about it. How do the economy, our industry, and our competitors affect us? What organizational and financial structures serve us best? All right, are we structured properly? Are we structured to achieve our goals? And what are the risks and opportunities of alternative strategies? And what are our contingency plans if our preferred plan fails? So there's a lot of planning that goes into trying to get through the next year and succeed. Now, these 3 steps describe the ongoing budget-related process. And the working document at the core of the process is called a master budget. And then in the next slide, we'll take a look at the master budget itself. So before the start of the fiscal year, well before, okay, like at least 6 months earlier, maybe 7, managers at all levels take into account past performance, market feedback, and anticipated future changes to initiate plans for the next period. Senior managers give subordinate managers a frame of reference, a set of specific financial or non-financial expectations against which they'll compare results. And these managers will probably be measured against these results. All right, so they should be involved in the process. Managers and management accountants investigate any deviations from the plan. Okay, the master budget is the initial plan of what the company intends to accomplish in the period and evolves from both the operating and financing decisions that they make as they prepare the budget. Okay, so we've got operating decisions in here on how to best use the limited resources of an organization. That is the operating budget. This is the part that we'll spend like a lot of time on. And then financial decisions deal with how are we going to fund this? You know, how much cash will we get from our sales? What are our expenses? Do we have to borrow money? And that gives us the financial budget. Now, when administered thoughtfully by managers, budgets do the following. They promote coordination and communication among subunits within the company. They provide a framework for judging performance and facilitating learning. And they motivate managers and other employees. And there are several challenges in administering a budget. Among them is the time commitment for a thoughtfully administered budget requires. Okay, an estimate suggests that senior managers spend about 10 to 20% of their time on budgeting, and financial planning departments as much as 50%. I'd like to see that research. For most organizations, the annual budgeting process is a months-long exercise that consumes a tremendous amount of resources. This is true. But what's also true is that budgeting is continuous. You know, trying to figure out what's happening in the future, especially in managerial accounting. We don't really care that much about the past, only to the extent that it informs the future. And the motive for creating a budget should guide a manager in choosing the period for the budget. Okay, for example, if the purpose is for the budget is cash flow, you might look at a 6-month horizon. But if you're looking for profitability on a new product line, you might look 3 years into the future. Okay? So, and businesses also use a rolling budget. This budget is always available for a specified future period by continually adding a month, a quarter, or a year to the period just ended. Okay, I think this is actually a good way to do it because then you never really leave it alone. It's always sort of in your head with all the assumptions. So you continually just adjust it for economic reality. And we have another 5-step process. Oh dear. Identify the problem, obtain information, make predictions, make decisions, implement, evaluate, learn. Okay, it's the same 5 steps that we've done in every other process throughout the book. And finally, the operating budget begins with revenue, includes multiple schedules, and concludes with the budgeted income statement. The financial budget is made up of the capital expenditure budget, cash budget, and the budgeted balance sheet, and the statement of cash flows. That's what results. Okay? So that's it, and we'll start with talking about the operating budget in the next segment.